Okay, good morning traders. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Wednesday, October 12th. Good to be with you guys this morning. Madad, Mark, Pete, Pooja, Simon, Wes, Graham, Eileen, whole crew's here today. So good to be with you guys this morning. So we have the FOMC on tap later today. I don't necessarily think it's going to be that big of a market release. Keep in mind the last quarterly meeting or the last meeting was a quarterly meeting, so we got the presser with Janet Yellen. We got to press her on some of the issues. We got the projections from all the Fed members. So not going to necessarily be a major market mover. There is a lot of Fed speakers on tap, and I included the Fed speaker calendar for you yesterday. Keep this nearby. We already had Dudley on the wires earlier. Later after the session here, you got George speaking, obviously, which is going to be a big one as well. You have Yellen on tap on Friday, and on Friday you do get advanced retail sales out of the United States as well as the University of Michigan confidence surveys. So after today, watch for these Fed speakers. Specifically, again, you have Hawker and which one? Rosengren is going to be another important one. A voting member here heading into Friday as well. So keep that in mind. Again, Friday gives you the advanced retail sales and U of Mich numbers as well. All right, Adam, good morning to you, my friend. Great to see you. Eileen says, good morning, Mike. Hope your reality is going well today. Cheers, Eileen. Yeah, so far so good. Little frustrated from the trading standpoint. I was all up in Aussie dollar, really trying to pick the high there. I took another break even there right before it peaked out, and now it's puking a little bit. So I'm going to try to see if I can get re-entry on that trade. There's a lot of interesting setups, actually. So we'll go over Euro Oz today as well. Dollar CAD, not a big fan of at this point, although we were involved yesterday. Euro Dollar, the breakdown is coming into initial support, so I just want to show you that as well. And obviously yesterday's setups from Kiwi CAD, Dollar Yen, and Euro Oz. Any other questions or trade setups you guys want to review, as usual, feel free to throw them on the message board, and we will take a look. Okay, so to start off the session, here's what the greenback looks like. Split performance, you saw the pound with a decent rebound overnight, 1% to the upside. Aussie with a gain of 0.32%. CAD pretty much flat on the session. Biggest loser is the yen, Japanese yen. Dollar yen pushing into highs again. We highlighted that setup last night. That slope continues to hold really well. So we'll take a look at dollar yen in just a moment. From the dollars part, here's what the index looks like. And I guess we got to, I guess at this point you got to call this a breakout. Remember we highlighted 96.82, which is kind of where we stumbled last week. Struggled there a little bit. 97.23, 97.26 is the barrier we talked about yesterday. The high day close from July, the 618 retracement of the 2016 range from that December decline. And we plowed right through it and closed higher on the session yesterday. Momentum's in overbought, not when I want to start trying to call a high. So while I can't necessarily advocate chasing this, it's a breakout. And above 96.82 at this point, you got to be really wary of trying to get too aggressive on the short side for the dollar. Okay, I feel because I'm saying this right now, it's probably when the dollar is going to peak, because usually when we get these exhaustions where all the bulls are starting to sort of capitulate. But we'll see how this pans out into the end of the week. Look at the FOMC today, may offer some volatility in price. For me, it's all about the pivot around 97.23, 97.26. So if we close back below this, I'll go neutral, but you really do need to get back below the breakout origin here at 96.82 to validate a little bit more of a pullback. And again, keep in mind that basic December trendline resistance. Next topside target of significance, really the next level I'd be looking for, is still 98.48 into 98.69, the 2016 open, and a basic 764 retracement of the decline. All right, so this is the ICE dollar index. Again, very heavily weighted the euro, so keep your eyes on euro price action. Again, as we noted earlier in the session, we'll take a look at it. Euro is coming into a near-term support target, so I do want to be cautious here, caution you on the long side, but those are the levels you'd be wanting to keep in mind for the ICE dollar index. As far as the Dow Jones FXCM dollar index, A little bit messier for me. I don't really want to mess with this here. We're kind of still holding broadly, or we're trading right at that confluence resistance that we've been talking about, 12,170. You have that longer dated median line, which has been a very nice pivot in price. You have a basic 786 retracement. Okay, you have some slope that's in play here. So watch this for the dollar index. Again, the blow-off possibility of this just being a fake out could still materialize. And I think on this index, it's a little bit different. Again, equally weighted. Euro, Aussie, Sterling, Yen, much smaller basket. But I think some of the gains that you're seeing versus the Euro kind of being exacerbated as well with that dollar-yen move. So we'll take a look at that. So no change on any of the levels for the dollar indices. Any questions? DXY was number 1. Number 2. All right. Hey, Conwall, great to see you in the room. All right, KiwiCAD was first up last night. Here's what KiwiCAD looks like right now. We went over this briefly yesterday in the webinar, and I just wanted to re-highlight the near-term support at 93. So there wasn't really a play for us on this an overnight trade. It's kind of been lackluster here, kind of just moving laterally. But major key support at 93, 93.05. Keep in mind you have the 100-day moving average there. You have slope support. You have downslope support for this operative slope right off the highs, all lined up right here. The risk remains lower below 94.33, the yearly open. Clear-cut pivot right there. As long as we stay below that, the immediate focus is lower. So looking for rallies to sell. Broader bearish invalidation for the broader trend is all the way up at 95.50. Okay, that's basically the July high, longer-term slope you see in blue here, and basic channel resistance. The monthly open comes in right in line with that as well. So big region. That's really the invalidation level. That being said, immediate focus is lower, well below 94.33. A break beyond 93.05, you're looking for 92.38 and 91.73. And that would be a clean 50 of the 2016 range. So what does that mean for us moving forward from here? Could see a little bit of a rebound. Wouldn't be too surprised to see this thing give us some upslope as we head into the U.S. Open. Broadly looking for short triggers, sub 94.33. Sir, I'm playing the ranges of crude and silver. So today, your valuable levels and buys, please. Yeah, you got it, Conwell. We'll take a look. Crude and silver. Okay, so before we move on, here's KiwiCAD on the near term. Note that there's a couple of things going on here, and I just wanted to break it down in the webinar for you because you might have been confused last night. On the near term chart right here, I do have this slope in play, which is what we talked about in the webinar yesterday, right? This is not the same slope I'm showing here on the daily chart. This is just basic channel, descending channel, extending off the highs, take a parallel off that low from late last month, specifically here on the 23rd. You see it coincide down here. This slope was a little bit less sharp. It was a little bit more a flatter slope. But what I was looking for is if this was a slope break here of support, it should have offered resistance on the way up last night. We almost rallied right into that before turning. Here's what KiwiCAD looks like on the near term. We failed just ahead, right around 93.70 and change. 93.79 was the February high and that lower parallel. So I'm still thinking you could get another shot at that. And that's sort of the near-term shift, where if it breaks, you're likely to see this thing travel, try to test the 2016 open again, and that would be, again, where we would start to look for short triggers on the way up. But here's what it looks like in comparison with last night. So slow mutter higher, couldn't quite get into that region. Real type range so far in overnight trade. So again, I didn't really have anything to do here on KiwiCAD last night, but it definitely remains on the menu still. And you're pretty much spent on CAD data for the remainder of the week even. New housing price index comes out tomorrow, but unlikely to be a market mover. Would that have been a short opportunity last night in Kiwi CAD, asks Eileen. Hey, D, no worries. What did I miss? We just covered the dollar indices, and this is the first pair from last night's update, so you're right on time. Um, let's see, Eileen. I wasn't really tracking because I wasn't really impressed with where price was. Looking for a rally higher to even start to look for a short trigger. So I don't know. Let's see short price. This is Aussie. We'll talk about that. That's just a waste of time right there. But Kiwi CAD. Here's what I tell you, Eileen. If I would have tried to force a trade off this, I do see a trigger here that I could have been involved in. Hold at 60, hold at 60, hold at 60. You got a near-term slope here that would have been a decent sort of support trigger. My problem is I would still be in that trade, and I don't know if I want to do that right now. That was a support trigger I would have taken. Real tight stop against the highs, why not? That gave you 93.63. You're looking for about 23 pips, so 93.40. Still would be in the trade, basically. Probably would have shaved some off if I was actually in it, but you see what I'm talking about? The range is just super contractionary, and I don't really want to mess with it. On a trade like this, I would have been much more tempted if we actually got into 93.80 with a decent short trigger, but um, yeah, price action's been really range bound, so I want to kind of see a little bit more of a catalyst on this play. Eileen says, oh, I see that. Make sense? So that's Kiwi CAD. Keep an eye out for this rebound. Again, just keep in mind the structural support on the daily chart where we are. Once we break 93, if we do break 93, sayonara. Don't even try fading this. That's just a straight shot, in my humble opinion, down into 92.40 and 91.70. Kiwi CAD going once, going twice. Eileen says yes. All right, cool, Eileen. Next up on tap is dollar yen. I wanted to give you an update on this from earlier in the week. I kind of cleaned up the levels. Remember when we talked about this on Monday, or specifically Tuesday, yesterday as well, I guess. We were working with a little bit. There was an added slope that we kept on from last week. I've cleaned that up, and I just sharpened up the levels a little bit. I also highlighted this on Daily FX yesterday. But the basic premise is, look, the trade remains constructive, the immediate sort of bias while above 102.83. Keep in mind that's also the weekly opening range low at this point. So very objective region. You have the 50 line or the 25 line, depending on how you look at it, off the lows here, which coincides on this. You got a couple of swing highs. Really nice level. Okay, so the immediate focus is higher while above 102.83. You're essentially looking for a stretch into 104.47 and 104.86. This is an area of much more critical resistance near term. Longer term slope resistance. The 50 line for the current operative slope. And just a decent pivot in price even. Here's what it'll look like on the 4-hour. Even an embedded slope. This is a slope that we introduced here last week, or I believe the week before, actually. You can go back in the archives, obviously, and look, but that slope has continued to offer some guidance, and the lower median line parallels also converge right around that 102.80 level. So you're looking for long triggers while within this formation. Again, topside objectives. Immediate resistance last night was 103.54. You're looking for 104. And again, those key targets at 104.47, 104.86, major resistance. Here's what the hourly look like, and here's what we look like now on dollar yen. Okay, so the only thing I just wanted to highlight here is a couple of different things. First of all, yesterday's rebound here was right at the weekly open. Objectively, forget what Mike Boutros says. That's something to pay attention to. Secondly, look at how many tags you've got of that clean median line. Look at this last night. Boom. Boom. Heading into the European Open, you got another chance. Boom. Right off that level. And here we are looking for that stretch into 104 once again. Now, one thing I do want to caution everyone is that objectively, again, we try to stay kind of as objective to what price action is saying as possible. This thing has just simply made a weekly opening range. Here's your Monday, Tuesday stretch, weekly open, off support, Monday stretch, and you're still holding that range. So objectively, again, if we break above 104, that shifts the focus higher to these top side targets. And into 104.47, 104.86, I'd be very cautious because you're looking at longer term structural resistance up there, and it could fade pretty quickly. So that's sort of the game plan, what I envision here on dollar yen. At this point, as we move deeper into the U.S. trade session, you want to bring up that near-term bullish invalidation from 102.80 up into the weekly open, because at that point, the weekly open will coincide with this slope support. Okay, for the embedded formation here. So then you're basically looking right back at 103.25 as near-term bullish invalidation. You only want to do that if we do break the highs here. So keep that in mind. Eileen says, seems a turn, quote-unquote, short happening on the daily, and the 4-hour double top, and that second top would have been a short opportunity in dollar yen. Okay. So right off the bat, before I even look at what you're saying, Eileen, be careful calling things double tops. Okay, remember, a double top formation isn't really a play until the low breaks. So I'm going to stop you right there, but let me get the 4-hour. Okay. So correct me if I'm wrong, Eileen, but if you're talking about this being a double top, right? The only way this would be a double top play, guys, and this is the same with head and shoulders, and this is the same with triangle breaks. It's very important to recognize these things. The only way this actually becomes an operative double top play to actually trade is when the low breaks. Once this breaks, then you have, okay, a double top, and the objective of a double top is now you have a measured move. Okay, the measurement of that range gives you a target to the downside. Until that low breaks, you're just testing resistance. And that's the problem people run into when they try to call double tops and head and shoulders and things of this nature. They try to preemptively call the move before the break happens. So just keep that in play. Does that make sense? Okay, she says, well, not in play as a double top, but a double top in that it's turning, a turn signal. Could be. In fact, more than a double top, Eileen, I'd be looking at something like this. Okay, series of higher lows, a series of lower highs. That's a consolidation for me near term. So this would give us, again, focus on, guess what, the weekly opening range high and that level at 104. So either way you look at it, this is sort of the region of resistance we'd need to clear through to really get the breakout play in dollar yen towards those topside targets. Typically, these consolidation formations are continuation patterns. I just say typically because I've seen a million times where it's not a turn signal, Eileen. So there's different ways that you can approach what price action is doing, but at the end of the day, it's the levels that are governing, what our outlook is. And right now, the opening range gives us that 104 level as resistance. It's a level we've been watching. And that's sort of the opening range high, objectively, that we would need to clear. Still like the long side, looking to buy pullbacks well within this formation. The 2-hour. Makes sense, Eileen? Says, okay, thanks for your practice. Yeah, anytime. Anytime. Be cautious when you get the kickback off resistance. A lot of people, specifically once we've tested it for the second time, a lot of people want to jump in on the short. This was the short opportunity, Eileen, and that was yesterday, right? In overnight for dollar yen. Would be the opportunity because you had a good place here to get a stop against last week's high, and that would have been a short I would have been interested in. But keep in mind, we're in an uptrend, and within that uptrend, okay, we're in an embedded structure that is even sharper of an angle. So you're always going to be better off buying the pullback than selling the rally here. Now, at some point, this is going to blow off. At some point, I do suspect you'll get a pretty big blow off in dollar yen, something like this. It could be today on the FOMC. I don't foresee that, but necessarily, who knows? Um, and if you spike into this region, I would actually be looking for a decent fade opportunity on a near-term approach for sure. So keep those levels in mind here, dollar yen. Pretty clean on the daily. I feel dirty even looking at it, but if the setup's there, the setup's there. All right, so Kiwi CAD was number 3, dollar yen was number 4. Euro Oz at an interesting juncture here as well. This is a trade that we haven't referred back to in a couple of weeks, so I kind of wanted to give you an update on where that is. All the Aussie crosses look pretty interesting to me, actually. So, oh man, I missed the entry right now. It's the major level of support. The major level of support that we were looking at it was 145.50, 145.48. Talked about it last night. Here's the basic premise. Very, very simple setup. So for the Euro Oz, bring it back to this daily chart that we've been following for months now, basic trendline support extending off the December low of last year. We tagged that again in April of this year. We tagged that again in July of this year. False break scenario, okay, here in August. Start of the month, you had an outside day reversal right off that same slope. Right off that same slope. Now, it happens to coincide dead on with a 786 retracement of the advance. So as we came into trade yesterday, I just wanted to highlight, look, you know, it looks like we're breaking the weekly opening range. That does shift the focus lower, but keep your eyes on this 145.48, 145.50 level. That's really the level to break. If we clear that, smooth sailing down into 144.60, 144.34. But objectively, to keep the upside slope in play, we wanted to see that hold. Add to that, basic trendline support, not going to really stress it. I have it in a dashed line here, just off the lows, and the low from that outside day reversal also coincided in this region. That's all to say, we're not trying to call a low, but if this thing's going to bounce, that's best bet of where you'd want to see it. Here's what it looked like on the 4-hour. There's that slope. There's a 786 retracement. There was the objective break of the weekly opening range yesterday. And I like this because we gapped lower into the Sunday open. We filled the gap, tested support, failed at the weekly highs, and that's your best opening range play. Okay, a test on both sides. We came to support, failed, came into resistance, failed. Now that highlights that range. A downside break, which was happening as I was writing this yesterday, shift the focus lower. Key support 145.48. Here's what it looks like now. So we might have just missed it here as we were speaking about the pairs earlier today, or earlier in the session on the rally here in Euro Oz, but came right into that level, dribbled a little bit lower down towards 45.35 here, and we're getting that nice little bounce in price. Now, before we get all excited on calling a reversal or a larger play here, you still need to clear this region. So I'm still looking at resistance. The levels haven't changed, right back at former support. The swing lows that you made here, that's 618, that's 46.65. The monthly open comes right in there, that purple line you see there, those purple dots at 146.53. So that's the level to beat to get this thing going. Major key support and bullish invalidation level. Below this, you do not want to try to fade this thing. And it's interesting because euro dollar is also testing near-term support. So looking higher here right into the U.S. Open in Euro Oz. I'd be looking to wrap that out and clean out all the long exposure near 46.65, near 46.30 here in this range. Keep in mind a wider ATR, Euro Aussie. And then we'll reassess on any type of reaction from there. But objectively, that slope we were following for so many weeks, do you see how we broke below it in late September? And after we broke, former support, resistance, 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 and breaking lower here. So if this holds, the focus, obviously got to get through the weekly high here, but the focus would be right back on that same trend line. So you would be looking for a test of that support again after it goes higher and go long where it is now if it gets back down there in Euro Oz. Yeah, I don't necessarily well and gives a long signal. Yeah, you're right on. The only thing I would add to that, I would say, is I don't think on a pullback you'll get all the way back down here. In fact, if the pullback gets all the way back down here, then I start to get a little bit cautious. I do want a pullback, but a pullback that allows me to get a stop against this low. So if you're not already in this trade, okay, you'd be looking for the pullback to give you an opportunity to get a stop within 30 pips. Quarter of daily ATR is about 30 pips. So I'd want to see a pullback, maybe a hover right around those former swing lows, bring it into a 30-minute chart, which is what I'm usually looking at, and then look for a long trigger while above 45, 48. You know what I mean? I don't want it to go below that again. If we're going to actually go for a test of the low, keep in mind the opening range for the week broke. So that could suggest you're just going to see a continuation. Make sense? Yeah, the zoom in retest is great when you're breaking. So once we break resistance, yes, I want to go right back into that support and look for a long there. But when we're doing something like this, we want to see that higher low get maintained. Says makes sense. All right, cool. So that's Euro Aussie, number 5. Interesting setup if you want to stay out of the dollar's way here on this rampage with this rip higher. Uh, these are a couple pairs, Kiwi CAD and on Euro Oz, I'll be actually stoking out over the next couple of days. Wesley, my man, says, maintaining my faith on Euro Oz. Yeah, we've been battling this trade for what now? Months, it seems like, right? All right. Anything on Kiwi Aut? I think you mean Aussie Kiwi, Eileen. Um, Let me jot that down. If we have time, we'll take a look. I do want to run through the dollar crosses real quick because we are coming into the minute. So um, let's just do our due diligence here. Aussie dollar and Kiwi dollar. Just to touch base on where those are. No changes to the active setups from the previous day. So from the 10:10 update, most of the levels, all the levels for Aussie, Kiwi, and CAD remain unchanged. Let's start off with Aussie. Here's where Aussie is now. Okay, and looking for some near-term support, I do think you could see a rebound higher here before you get the opportunity to get back on the short side here, but it looks pretty clean. Here's what the Aussie looked like on the daily chart early in the week. We were looking for a 75.45 tag. We got a deep probe of 75.45 and then a decent rebound. I was all over this thing yesterday, really trying to get on the short side. You know, I was up to like 12:30, just trying to cap this thing off. Now it kept on pressing higher, so I did get stopped out at break even. But once again, early into European trade, we actually got a nice, decent short trigger. So if you're trading European hours, you got a nice play on that earlier today. Here's what the intraday chart looked like earlier in the week. So we got that pullback into 75.45. The rebound, initial resistance was 75.70. We came right into this former slope, capped out, and now I'm looking for support at this slope. Okay, here's what it looks like on the 30, or the hourly rather. Okay, so broke down, tag that, came up higher, tag that, and pullback is right here. And this is where we are right now. So I'm looking for support right around 70, basically just below the low we just made. 75.55, 75.50 region would be a nice area to find some support here. on one last push higher before this turns over. You're still within this decent median line structure. Everything looks super clean here. I have no change to the levels or the outlook. And your major support, confluence lower down, is into 75 or so. At least from a Fibonacci standpoint. Let me bring this into a 4-hour real quick. All right, so the opportunity actually near term might actually be to fade this weakness here for another stab higher. Keep in mind, it's counter trend, okay? So just looking on that based on the pivots that we've seen off these median lines, and near term, if we see some actually, let me bring it up right now. Let's see what this thing looks like. Where are you looking for new shorts on Aussie? So for Aussie dollar, the ideal scenario would be, look, it's dependent on where we are from time. I like it lower. Like I said yesterday, the bearish invalidation for the near-term objective is 76.07, 76.08. This is the weekly open, excuse me, a 38.2, sure, decent pivot in price, and a nice median line that's continued to essentially govern the highs. For the last few weeks here. Nice pivot, support, resistance, turn just ahead, probe, and failure. So that's kind of my limit of where I want to stay bearish. But a rally, if in time, Eileen, we move back and it doesn't approach this until maybe later tomorrow night, something like this, maybe a 75.90 barrier, but basically just below the 76 handle is as close as I'd like to get. Might not get it. But you're definitely in a near-term bearish formation here off the highs. So let's look at the 5-minute and see if there's anything coming up. So here's Aussie. This is just, again, this was kind of a waste of time. I did end up totaling like 20 pips on that, but I just kept on taking break-even stops. When you're calling a high, or when you're trying to, fade a rally like this, specifically on the breakout, you kind of saw a little bit of a run here early in Asia last night. Yeah, I don't want to take a stubborn approach because I'm looking for a possible run to 76. So it's pointless for me to load up all and get all aggressive on the short side. So couple of 5-pip pulls, couple of 4, 3-pip pulls. I was kind of shaving off a larger position, go break even, got stopped out. Decent trigger again here. You're getting some divergence. Went in pretty heavy, started shaving them off as the lows, go break even, took another stop. Another entry here. Shaved off a couple of there. And again, an overnight trade kind of went break even. And once the volatility started to die out, I kind of gave up on this thing. You didn't really get a decent trigger till this last rally here in late Asia, right ahead of the European Open. And here's what it looked like. I don't save the near-term charts that I actually trade off, which I probably should. But here's another 4-point trigger in momentum, right? You had a real clear-cut stop. Decent opportunity to get short. And you're looking for about, and overnight, this was about 20 pips. So you're looking for about 20 pips per trade, and you're kind of already achieving that at this point. So we'll see. Looks like we're going to make another run at 75.45 here, but that's still going to be the near-term support target you want to keep in mind here for for Aussie dollar. I was going to say you're making some divergence here, but again, we just kind of dispelled that with this last move. So watch into the U.S. Open for an exhaustion low near term, maybe. If we're going to get a sort of a three-wave bounce to the upside at least. Any questions on Aussie? A little bit more of a risk-sensitive pairs. Watch the equity market, specifically with the turnover that you saw yesterday. It was the biggest decline since probably September 13th of last month. Just taking a look at equity futures. Dow is off about 38 points. S&P down about 3.5 handles. Nothing too major yet. We'll see if that weakness starts to carry over. Okay. All right, so if no questions on Aussie dollar, that was number 6. Let's hit Kiwi dollar, that'll be number 7. To beat a dead horse, sterling. Do you think it has the possibility to fast crash again now that all eyes are on it, and maybe protecting it from such future moves or wishful, naive thinking? I don't think it's wishful or naive, Eileen. I just think it's purposeless thinking. It's useless thinking. I just don't have an opinion on it right now. I do think it's going to see maybe another drop into the lows, sure. I do think there's going to probably be a wicked recovery, but until I get some constructive or bearish near-term price action, it's just a whipsaw. And if you're not positioned in the sterling, I don't have anything for me here. So maybe if we have time, we'll take a look, Eileen, but let me run through this real quick. Kiwi dollar. So here's Aussie. It's a very similar setup, again with the 1 hour, very similar setup with Kiwi. Here's what Kiwi looks like. A little bit cleaner of a descending formation. Again, these levels have actually been a lot more lockstep. So I probably should have shifted my attention a little bit more interest to the Kiwi last night instead of the Aussie. But here's what Kiwi looked like earlier in the week. Here's what we look like right now. Whoops. Okay, there was that key support early in the week at 71.80 that we needed to clear below. Once we cleared that, 70.86, 70.50, 70.86, 70.50, came into resistance right back at 70.86 again last night. Ping pong right back into 70.50 right now. Continue to like the short side while below 71.86. This is going to be my near-term bearish invalidation level. The downside targets haven't changed, but one thing I do want to bring into account is ahead of this major low, you have the Brexit swing low in the 64 level, which is a 1618 extension. You do have a couple of slopes you want to keep into account. This red one here, okay, basic trend line or channel support, and the lower parallel for the current operative structure in blue here. So watch these two levels if we break lower on Kiwi ahead of the target that I have cited on the report at 69.65. So that comes in right about like 70.20 and then basically 69.90. Okay, two levels you want to keep in mind here on a continued downside move in the Kiwi. Near term, look for a rally to sell. Momentum has been giving you some pretty strong divergence here. Again, not the most convincing just because it's below 30, but on the duration of time and the distance in price, relatively speaking, that gives a focus on this trigger right here. So you have building divergence. If you see that trigger break to the upside, look for a recovery, back up towards that 71.18 would be initial area. I'd start to look for some resistance on a move lower. Any questions on Kiwi dollar before we move off? House sales in New Zealand come out later tonight, 15:30 Eastern time. You do get food prices, business manufacturing PMI actually is the only thing that might be interesting. Here's what the data print looks like for Kiwi tonight. So if you want to take a screenshot of that, keep in mind, feel free to do so. Hey Amir, great to see you in the room. He says I wasn't here from the start of the webinar. If you can shed more light on pound yen. Yeah, I'm not. The pound is. Listen, the pound cross is just not on the menu for me, Amir. If I have time, I'll take a look at it. We briefly touched on pound dollar, but if I have time, I'll take a look at that. Let me run through these real quick. Dollar CAD number 8 looks like this. So remember, the focus was lower below the weekly open, which is what I cited on Monday. We broke back above that. So I'm kind of doing nothing with this right now. I still think you're at a blow-off point. I still think this thing is going to fake out a lot of peeps before it finally makes the move. In the meantime, it's a tight range. It's just there's really nothing in it for me at this point. I kind of want to see a resolution to this consolidation, this capitulation that we've been in for nearly a month here, basically. So I really don't have anything to say necessarily on dollar CAD. Just watch these key levels on the daily chart. And really for me, a break below the monthly open, a break below 31.18, that's what we need to get through to really validate a reversal. Till that happens, yeah, this is just all noise. You're going to see a lot more chop, and I don't think it's worth our time. You have a nice momentum trigger also on the daily chart on building divergence there. We've talked about that earlier in the week. So I'm waiting for the turnover. Price action just hasn't spoken enough or loud enough to suggest that we're actually getting that. So a little more patience here on dollar CAD before we find a resolution. Also keep in mind, if we do break below that monthly open, that 31.18 target, that would necessitate a move back below the 200-day moving average, which has kind of been teetering for the last couple of weeks. All right. Where are you watching for shorts on the then on the Kiwi dollar? Did I miss that question earlier? Initially, I'm looking for that rally back into this zone, back into the former slope support, right? Former slope support should be resistance, and it was. So initially, this would be the first area. Like this last night was actually, like I said, better than the Aussie alternative that I took. I should have been focused on this. But in any event, that was the initial area of resistance you were looking for. If we get another rally towards this, I suspect, specifically because of the divergence that we're getting here, if we do rally here again, that might actually materialize into a bigger break. So I'll be looking for short triggers here in momentum, Eileen. I wouldn't just take a blind entry there, but that would be the first area. More so, the former opening range low, the former lows from last week, and the 100% extension all line up at that 71.20 target. Okay? All right, so any questions on dollar CAD? Sorry, I took a little segue there to take that question on Kiwi. Any questions on dollar CAD? Feel free to post on the message board. That was number 8. Euro dollar, number 9. Real quick update on that. Steven says Kiwi dollar. Okay, some more questions on the Kiwi here. It says I don't see the divergence. I see a lower highs in price and lower highs in RSI. Am I missing something? Yeah. So Steven, when we're in a decline, you don't want to be looking at the highs in price and the highs in RSI. You want to be looking at the lows in price and the lows in RSI. When the market is in a rally, you're looking for divergence by looking for the highs in RSI and the highs in price. So here's the daily chart, or here's the 30-minute, or the 1 hour. Bring it into a line chart. Easiest way to identify it. Line chart. And here's price action. This is, as close as it gets. Maybe I should correct myself, but price action making a slightly lower low. The oscillator making a pretty more dramatic high, right? Let me get rid of this trigger, make this easier for you to see. Okay, price action, lower low, lower low, lower low, lower low, right? Higher low, higher low, higher low. Do you see the difference, Stephen? So that tells you that the downside momentum is waning. So when the market's rallying, you're looking for divergence into the highs. You're looking for price action to make a higher high, and then you're looking for the oscillator to make a lower high. I'm just pointing out where that's happening. This is not actually divergence here, but you get the picture. Make sense? Steven says, glad I asked. Thanks. You're more than welcome. Okay, so long story short, look for a near-term rebound. 70.50 is a pretty big level against a basic 38.2, but also keep in mind those swing highs like we talked about yesterday from March and May of this year, or April and May of this year, also coincide in this region. So looking for a rally to sell, eventually looking to tag these two median lines. Euro dollar. Quick touch base on euro dollar. I just wanted to highlight that 110 handle, 110.09 actually is the basic 786 retracement from the advance off of the Brexit low. It's exactly where we just tagged the lows right now. Could see a near-term rebound. Again, here's another example, Stephen, of divergence into the lows. So price action making a series of lower lows, lower lows, lower lows, series of higher lows. So you could get a nice snapback here in U.S. trade. You have to stay bearish at this point, sub 1085. So if you get a rally, look for initial resistance, maybe a soft target here at 110.45. But I'd really be looking or more interested in move into this region to try to get back on the short side. If you're holding shorts, a nice area to take a little bit off the table. But extended targets to the downside, you're looking at 109.30, 109.09. And obviously the 2016 Open comes down at 108.72. But it's a breakdown anyway, slice it. Anyway, slice it. Now it's funny because it could be the biggest fake out of all time, and you can imagine a scenario where the dollar just collapses on something silly someone says today from the FOMC. Keep in mind, again, you got a lot of speakers on tap this week. You get those minutes. Again, I curb your expectations there. But these central bankers, again, really perversion of the markets, in my humble opinion at this point. We'll see. Pooja says, dollar CAD, I'm long at 132.40, target 132.90, stops at break even. Let me take a look for you. Long at 132.40, great entry. Target at 132.90. Just shy. Stops at break even. Nice. Nice. What do you have at 132.90? Is that just an inside target, Pooja? Because the 324 high actually tagged this thing 3 separate occasions in price highs, and that was a level that we highlighted, back on the daily chart weeks ago. So it kind of worked out good. We closed just below that, so I do like that 30. I'm all saying this just because I do like the 32.90 uncovered gap and 88.6 fib. Love it, love it. Yep, I got you. Beautiful. Like that intraday move. D says, what stops would you put currently on a euro dollar? I'm short at 112.40. So to go back to the euro, you're short at 112.40. Okay, so you're in a longer term position here, right, D? Well, where would you put your? I'd have my stop above 110.75, 110.80, like I just told you. This would be my bearish invalidation level. Look on the daily chart to the right. Okay. Basic slope support. The 50% retracement of the entire advance off of last year's December low. The reversal day close from right here. Big old outside day reversal made in early July, which has been a decent pivot in price. And they all coincide in this region between 110.75 and 110.66. If you take a look at the near-term chart, there's a 618 just of the near-term rally at 110.85. So this region is sort of where I'd want to see euro hold below this for the immediate downside. Now, even if it rallies beyond this, D, and this is why I don't want to shake you out of such a good entry. Even if it rallies beyond this, I'd be looking objectively at those swing lows from last month, 111.25. So if you want to kind of test your patience a little bit more and kind of hold off for a larger move, break above this region would certainly suggest, you might be on for a full-on reversal in price. So 2 levels of interest for me would be that 111.20 level, the swing lows from last month, initially 110.85, 110.70. Make sense? 111.40 sound safe? Yeah, I mean, that would be, again, I'm a kind of guy, D, that, yeah, I don't, I tend to take them where I got them. So I would be looking to shave something off at these levels a little bit, and then bring my stops. Yeah, I think 111.40 is a fair, fair assessment for sure. Make sense? You're more than welcome. Okay, so that's dollar CAD. That's euro dollar rather. Um, number 9. Again, a break below here. Watch those swing lows from July. They come in right around 109.50, but basically 109.36 is going to be a big level. That's a 618 retracement the entire advance off the December low. Big, big region. So this is like your last ditch effort here on the euro. Still looking to sell rallies. Moving right along. Crude and silver. Let me take this real quick for Mr. Conwall. Sir, I'm short from yesterday in crude, 51.26. All right, you're at slope support right now, Conwall. Remember we talked about this yesterday? These actually levels have been playing out pretty well. Well done, man. So yeah, you're coming right into a basic slope support near term. You got the weekly open just lower at 49.58. Let me clean this. Let me clean this up for you real quick. Don't need that. Give me a sec. I just want to see what this looks like. Ooh, okay, yeah, pretty strong divergence. So this is a 4-hour chart, a little bit bigger of a range here, or a little bit longer term of a view. Take a note, Steve. Here's another example, man. Again, just driving it home. Price action, much more concerted high. And remember, whenever we're looking at divergence, it's all about the close. Don't look at the wicks. The wicks mean nothing. Because the price line on the RSI signal only gets pegged once that wick closes or once that candle closes. So here's a much substantiated higher high in price. Here's a lower high in momentum. That's waning momentum. Specifically, when one of the reference points are above 70, one is below, those are typically actually pretty decent signals. In generally speaking, the closer the divergent points are to 50, the stronger the signal becomes. So just a quick breakdown there. But to answer your question, Conwall, I like the signal. Okay, there definitely was a momentum trigger here. You're really knocking it out of the park with these commodity trades lately. Nice signal here on the short. Tested that as resistance. Came off. Tech on a quick retrace. Oh, did I just do that actually? Oh, here it is. Okay. Okay, so this is what I would say. I know this is kind of messy, but just real quick, this is your initial support. You're coming into it right now. Watch that trend line, really near term. This is a 4-hour chart, and that's backed very closely by the weekly open. If we get through 49.58, look for this to be sort of the marker on whether this is going to be a deeper correction lower. Now this is basically defined by the high that you made here in August. You have a basic median line which we just shaped out right in front of you. Really nice pivots, support, resistance, resistance, break, resistance, break, support. That coincides on a basic 236 of the entire advance and the 618 extension of the advance off the lows. So that all lines up right around 48.60 into 48.76. So near-term targets, obviously 51.63. If you see a topside break there, that's going to invalidate this near-term weakness. You'd be looking for a rally towards 52.50 and 54.30. That's a big target to the upside too. All right. Conwell, sorry for the delay there, but just some quick fresh targets on you. I know you're in this trade right now. Watch that barrier. Okay, if this holds, I'd be having to stop at break even at this point almost for that entry that you're in. Nice entry though. Steven says, I appreciate the extra instruction. Hey, anytime. My pleasure. That is crude. Silver would be number 11. Let's take a look at silver. No news there. For the question on silver earlier, guys, same exact levels as yesterday. We highlighted this major support at 1740, backed very closely by that 200-day moving average and slope support. There's really not to do much while above that on the short side, okay, unless you get a decent rally either towards the median line or more critical resistance at 1827, 1843, these levels. So we haven't really gotten into the median line either. It's kind of just giving us a really tight range at support. Gold is in the same scenario. Here's gold sitting right at support. A little bit longer term, 38.2. Swing lows here from earlier in the year in June. This one is at slope support, so it's a little bit different of a play, but you can see near-term price action, real lackluster since the start of the week. So in the metals, I either want to see a concerted rally to give me a decent opportunity to short. Other than that, if you get a break of the weekly opening range high, specifically like 1267 here in gold, in silver, maybe a move back above the median line, you might have an opportunity real near term for the long side of the trade, but that would be a counter trend, and inevitably you would be looking to sell that rally. But not really excited with the metals early in the week. As far as crude is concerned, we went over those levels, so that's all the commodities on this front. Aussie Kiwi for Eileen. That'd be number 12. Looks like this. Challenging the 200-day moving average here today. Hey, Eileen, remember this slope from way back in the day? Yeah. Ain't a damn thing changed. Still in play. 1, 2, do. Same slope, same slope, same slope. In fact, nice confluence to 50 here over the next couple of days. We fell out of favor with this, remember, back in August, right? Or I guess it was early September. Once it broke sub 103.53, I kind of threw Aussie Kiwi right out the window because of the severity and the length of duration of time that we've been governed by this slope. Yeah, I just had nothing below that, and I wouldn't even know what to do with it. Maybe an 88.6 retracement may have been sort of the level that caught that. Let me actually check that out. Nope, not even close. but we made an objective break of the monthly opening range late in the month on the 22nd of last month. And that's when this thing started to show a much more concerted reversal in momentum with a break above 60 on that same day. And it's been on an upward rip ever since. So I still think you look higher. Eileen, the only thing I would say today is watch for the close. If we close below the 200-day moving average, you might see a little bit of a setback. Look for support right back at the yearly open. You have that 38.2, which comes in at 106.55. Might be a decent area of support, but I'm essentially looking for that stretch into the 50% retracement into that same parallel. Takes you into 107.85, 107.80 range. All right. Another one, outside structure bites the dust. I mean, that's what it was down here. Now that we're back within it, you still have those same slopes. Yes, right. Absolutely right. So look for that topside slope. I don't have anything on this near term, Eileen. I'll take a look at this tonight. Maybe we'll have something on tap for us to play with tomorrow, but it just hasn't been too many setbacks that allow you the opportunity to get back in, right? These slow drifters are sort of the bane of my existence. Here's a shot in the dark. Let me just see what this looks like. Hmm. 618 line, really nice. Resistance, pivot, break, support, support. Leave that on there for now. Actually might be even better slope there. Really nice reaction there. All right, so we'll actually, I'll work with this for now, Eileen. Again, I'll take another look at this tonight and see if there's anything interesting that kind of comes up on the longer term perspective. But just watch that July high. I would still say this is kind of still the main event for me. It might actually be a decent short from that level, just on account of what we've been doing there with the slope. But broadly speaking, I do like Aussie Kiwi higher in general. Might be a near-term opportunity to just take an exhaustion trade there, but I would be looking for a larger pullback to get long. Areas of interest, by the way, where that would start to look a little bit more appealing. And get rid of this noise. You know, just looking at this objectively, this would be an area of interest for long exposure. Maybe over the next week or so, heading deeper into the month. All right. So that's Aussie Kiwi. We will revisit that. That's number 12. Really quick on pound yen. Not sure who was in. Was someone in a trade here on pound yen? I don't want to leave you out. Amir. He says I was long pound yen. Okay, here's what pound yen looks like. Just real quick, Amir. Again, I'm not a big fan of any of the pound crosses at this point. We've been following pound yen until the breakdown, obviously, in the washout that we saw last month. If you are short pound yen, I would just caution you because of the exhaustion trade. That's all. There's a lot of interest on this. Watch for 125.89. Slope support, which is still holding despite all the mess that we saw, obviously, and a couple of drifts below. That coincides with an 88.6 long dated retracement at 125.89. But I don't really have anything compelling here on pound yen. Still not really too crazy about getting on the short side, okay, Amir? So just use some caution with these longer term support slopes. Still haven't really cleared that to the downside yet. Okay, and the yen is one of the weakest trades on the day. So just be careful with getting excessively bearish on the short side of pound yen. All right, guys, we're going to go ahead and wrap it up right there. I will pick things up tomorrow morning. Keep in mind, it's Wednesday, so you do get Mr. Jamie Setley, my good friend and partner, at 1 o'clock for the midweek strategy webinar later today. And I will see you guys right back here tomorrow morning at 8:30. Eileen, Steve, Kamwal, to everyone in the room, Pooja, have a great trading day. I'll see you tomorrow. Cheers.